to the show. It's UTG. It's UTG. It's UTG. It's UTG.
How's it going, everybody? So we're going to quickly go over GME because GME is quite literally at a deciding point right now. It is on the brink of either deciding we are going to continue this uptrend that we've recently had, or we will break down and then kind of go through, you know, some several key areas of support that it could drop down to. And then kind of maybe towards the end, we're going to talk about the kind of TA10, if you will, on what had happened in the past and kind of make sense of why, right? So, in general, right, the whole belief, at least my belief, is that, you know, the entire structure is in accumulation, right? We saw the rounding formation, if you will, drop to the bottom, obviously caused the squeeze, the spring, came up, hit the SOS, drop back down, which it previously tested prior resistance, turning that into support. That's what these things do, right? They break out, back test previous highs. Sometimes they drop down to the midline of these structures. We saw a recoil, if you will, right? We saw the sneeze show that support when we dropped down to $10. I don't think, you know, there's a pretty small chance that we will dip down that low. I'm not going to say never, but probably unlikely. It could, but probably unlikely, because if this happened before, what are the odds that it'll do it again? Probably very, very similar, right? And so with this theory in mind, we know for a fact that the $10 to, say, $16.50, $17 range is ultra support, okay? So a couple things that I have been watching is I had taken a parallel channel from the squeeze and the sneeze, highs and lows. It's very interesting to see how we had this line in particular is kind of the one that I'm focusing on. We had never had a weekly candle fully open and close any single time. I mean, once these touched, it hadn't seen that basically until the squeeze again, right? But again, we didn't see any open and close. Not here, not here, not here, not here. And again, now for a fifth time, even though you can't see it with these harmonics, but for a fifth time now in the last, you know, year and a half, we are rejecting this midline. Now, once we break above that with a fully open and closed weekly candle is what I believe going to be the confirmation that we will never see anything lower than that for a long, long, long time, potentially never again. This is just my, right, the way that I'm looking at this chart. And so what does that mean right now? Well, I think that since we have now, again, rejected for a fifth time this line, we're starting to see, or we did see on this kind of the smaller time frames, I usually like the 2-day on GME. It seems to give a little bit more clarity, in my opinion. But we did reject off of this. We now are like, well, how do I know? It's quite literally in the middle of the range. Like, it's testing prior resistance here. Could it just turn and burn here and, you know, go up to our first bat harmonic completion at about 27 bucks. We know that's a supply zone there, so we would expect a retracement from there anyways. But is it going to do that? It totally could. Is it going to sink down further? It totally could. Okay, so these are kind of the things that I'm looking at. I do believe that there are some good signs, there are some bad signs. So we'll go through that, and then we'll kind of do the TA10 stuff at the end. So looking at the weekly, we did reject off of that same line that we have here and here and here and here before. So not, I guess, super unexpected, but a little disappointing. Especially when we had all of the indicators, showing some really positive things on the weekly. We had the RSI bursting through center, technically still above, potentially back testing that, still positive. The MACD, don't really like that it's starting to curve, still could go through, still could see an upward movement, just something to monitor. KST is a little bit laggy on the weekly, but regardless, still fine. Have the cross still splaying. It's fine. ADX, DMI, not entirely excited about this one, mostly because the ADX, while it started to rise, we saw the DMI positive go down with this move, right? So as soon as this thing, let me turn this off. As soon as this thing, we saw this thing start cooking, we saw this thing start to go down. Yeah, it's not super horrible news at this point. This thing absolutely could just do this, and then we see the DMI negative cross. That DMI negative cross through the ADX going downwards is going to be the key that we need to see for this thing to continue the upward movement, as well as you want to see the DMI positive continue up as well. But right now, we don't have that cross. It looks close, but not quite there yet. A few points away. It's actually not even a point. It is a tenth of a point, which is fine. So that's something to monitor. So let's hop down to the 2-day. So like I said, I like to look at the 2-day on the chart specifically. Let's turn off drawings first, and we'll turn on some indicators here. So what do we got going on the 2-day? Well, 2-day, we kind of have this RSI channel. We did reject the bull zone. It's going for a test of the RSI center line and the SMA. This is going to be huge. If we lose that, it is probably most certainly going to keep dropping. And, I would probably target, right, this 786. This level, I think that's going to be pretty key. You do have a gap fill there as well. But regardless, that is an outcome that we could have. We do have a lot of support here. We have the Hull, we have the PSAR below, we have the 50 below, we have an EMA below. It's not great that we didn't push up and maintain the 200 on the 2-day. But there are some positive things, there are some negative things. Okay. So what is the confirmation line? Well, what I believe the confirmation line to be is, from a basic standpoint, if we were to look at the daily here, this low right here, this solid bodied candled finish low, 2281 roughly. If we were to close price below that, that would be bearish confirmation that the trending upward movement is over. If the stock were to turn up from here, this would grant hidden bullish divergence because price action, you have a higher low, But on RSI, you have a lower low. So that would be hidden bullish divergence, and you'd see continuation of the trend up. So that is something that I'm looking for in the next few coming days. Do we get that daily close below it? Do we get that confirmation? If we do, okay, the bearish part of this. So this is where I will bring in some of these here. So we did have a Gartley that had completed. We saw a little bit of a reaction, not something that we were, we were kind of hoping that it would just continue. If this thing continues to drop, we do have a potential crab, right, that had turned from that Gartley. That crab would be down at about $20.70. There is a potential alt bat that completes down at about 19 bucks. Now, I think these are completely reasonable if we were to lose that deciding moment, that last prior low. What I don't like, in theory, is that if we were kind of thinking that this entire thing was a reaccumulation that is looking for a spring, one thing that I don't like, and I've been saying this for a while, is that when you hit a bottom of a spring, you typically look for that thing to skyrocket pretty much immediately. You want to see extremely high volume following that. Okay. Now, we did have some volume come in, but the fact that it made a rounding top back to support, it's not exactly very likely that that is a spring. And usually, when that were to happen, springs, or what we thought would be a spring, could easily turn into a redistribution pattern, even though you got this nice move up, right, from 20 to 26 bucks roughly. That's pretty damn good, right? But overall, right, it's going to test previous resistance. And we did kind of see that potentially fail. So if we turn off the drawings again, notice how we have an influx in volume coming up. We saw a fat rejection down. We tried again, but then it just kind of sat here, and then you started seeing all these top wicks, indicating that this could be sellers absorbing buyers at this level, okay, and potentially turning it back down. So another thing I wanted to just quickly talk about here while it's on my brain, since, this high that we had, we had been making lower highs and lower lows. Lower high. Potentially, we're looking for another lower low. And let's look at the weekly quick. So if you look at the weekly, okay, notice the tip of this RSI, right here, it's about 26.45. Note that the most recent high that we had, 25 bucks, candle close, right? This could be some bearish divergence, right? Because we made a higher high on the RSI, but we made a lower high on price action. So that's just more confluence to we might be seeing a lower low at this point because we failed to break a higher high here. Okay. It's like I said, it's not that it's over right now. We don't have confirmation yet that we are going to find a lower low. Okay. You technically have a break in structure right here to here. So it was a positive move. Nothing is confirmed yet because ultimately your break of structure are these two lines technically. 20 bucks and you're looking at 27.33. And so if you were to have a weekly candle close below it, then you are going to be looking for a lower low, and that would make a lower low, right? If you were to break above that, confirming that the trending move is actually going to continue up, you would wait for that to confirm. Then you would wait for the pullback before you buy in on that to continue that upward movement. Okay. But right now, we're just kind of in the middle of this range that we don't have on a macro perspective confirmation yet of the trending move. And like I said, on the daily here, on the smaller time frames, that's kind of what we're trying to figure out here is we know that this is the prior low, right? 2280-ish. Is this thing going to come down, fill these harmonics, and go back up? Well, typically, like I said earlier, springs don't usually like to double bottom and go. They typically like to hit a liquidity sweep, okay, which means one last hurrah down to get any open limit buy orders at the lows, and then you would see the buyer step in and send this thing. And again, we would be looking for high volume to ramp up at that point. And now, looking at the past, we can see how let me turn off some of these here. So if we look at the squeeze, right? The squeeze had occurred, found a high, and then immediately, right? Immediately it back tested the red boxes from the past, right? This was the previous highs that we had talked about. It had back tested the highs to find buyer support, and it came all the way back down to $10 before it found that support, launched back up, excuse me, and then it was a slow drift all the way back down to that exact same support. The most basic form of support shown after the squeeze. Okay. Now, that could be the same exact scenario as the sneeze here, right? You had the sneeze event occur, and then you kind of saw the same thing, right? You saw it top out. It came all the way back down to where the buyers, the lowest form of support, where buyers stepped in and said, not any lower than that, sorry. And then we saw that immediate reaction again, and then we've kind of been just in this this two channel basically. We dipped down on this lower channel underneath the midline for a little bit, but ever since then, so November of 24, we've kind of just been beep booping between these two channels here. So does that mean that we could dip down into this lower trend channel once more and see the same thing happen? Absolutely, totally possible. It's typically what a spring does, right? An accumulation, a reaccumulation pattern with a spring will typically dip lower to a lower form of support for that liquidity sweep of buyers to soak up. And then if the buyers are interested enough at that level to where they don't want to drop this thing any lower, then it will cause this intense volatile reaction up, and it should be pretty volatile and fast in those terms. So we know that lowest form of support since the sneeze was that 1770 area. I think it's extremely possible that if we lose, right, the daily kind of that 2280 area that we were talking about, I don't think that we will hit a triple bottom and then rocket ship out of there, because it just, even though I understand it's the macro golden pocket, but if buyers weren't willing to send the thing out of this accumulative range on the first attempt at 20 and the second attempt at 20. They both got, fizzled out at that. The first one was what, $23, $24 area, and now $25, $26 area, and they still don't have enough juice to do that. That's kind of right. Kind of not ideal, and maybe they need to dip lower for that to happen. Could it be 19? Sure. Could it be 18? Sure. 17? Sure. I mean, we know where support is overall. They send this thing down to 15, $10. Good luck. The whole thing's just going to happen again. So how big was this move, right? You think market makers want to drop it down that far just to cause another 551% move? Probably not. But they definitely, if I was a market maker and I wanted to screw a lot of people out on their positions that they've been, potentially bag holding for a long time, I would want to dip it down just past, right? Hit those stop losses, grab all that liquidity, and then send it. That's what I would do if I was a market maker. If I was a dick, I'd do that. So that's kind of what I'm looking at in the near-term future. Again, that is the kind of the bad news, right? If we lose that level, yeah, we might be able to have a harmonic reaction here. We might be able to have a harmonic reaction here, kind of at this midline. I think that's actually a safe, place, because look at this and how far it sent it. Look at this, how far it sent it. Right? It dipped here, sent it. Here, sent it. Close enough, sent it. You want to do it again? Sure. I guess. I'll play ball. And then the scary thing, right? Oh, what if we really dip down and hit that 1770 lowest form of support level here? Probably going to send it. I mean, shit. Even if you just do, let's say it drops to that 1770 area, okay? And then you just ride that up to the top of this same trend line. That's 43%. That's a damn good trade. That's a damn good trade. Not even that. You do your stop loss, right? You know where support is. This would be cake, dude. Your lowest form of support was that 1770 area. Shit, I would probably even, because I was actually looking at this, right? This is a spicy level, right? So I'd honestly just put my stop loss just below that. You telling me I'm about to get an 8.5 to 1 risk reward ratio? Sorry, that was a little high. You telling me I'm about to get a 5.5 risk reward ratio? All right. Okay, so I'm just not worried about this. It sucks in the near term. Yeah, if we go down, that sucks. We get it, right? But long term, I mean, this thing is going to be $38 at a minimum at some point. It's going to happen. It's going to happen. It will happen. I think it's going to happen. Okay, that's my target, 38. Like I said, if we can get that weekly candle open and close above, in between this channel, that's the moment. That's where I'm thinking, Kate, overall trend change is about to occur, because we've never had that ever. Never once in this channel had an open and close weekly candle. So that's what we would like. Okay. So if we want to talk bullish, right, is that we get that reversal right here. That would essentially cause the hidden bullish divergence, kind of with a back test of the center line. You would want to see this thing retest that bull zone, ideally get into it again. And then you're looking for this harmonic here, okay, at 27 bucks. This is prior resistance. There is a huge supply zone there. A whole bunch of limit orders are open right now, waiting. If price were to touch that, it's going to soak it up, and you'll probably see a reaction back down. Probably to test the same range that we kind of rejected off of. Okay. So if we were to move up, I'm going to take profit here. You'll likely see the absorption there. Send it back down for retest of what once was resistance to test for new support. And you can buy back in somewhere here, and then you kind of hope for the next movement up into the next supply zone. And so let's see if we got one on a smaller time frame. Yeah, so the next supply zone, you know, is kind of at this, let's see, so $30 level, pretty much. I want to say that there was a, I feel like there was a bigger one here. Let's just get rid of this. Please hold while we check this out. So, not seeing that. So we know that one, but I want to say there was a pretty decent one from like 30 to 35. Maybe it was the 4 hour. Oh, yeah, it was the 4 hour. So same thing, right? So you would then look for, if we get that reaction, back test, right, the previous highs, then you would look for this bat to turn into a crab at the 1.61, close enough, level. Okay, so you're looking at 33 bucks. We know that that same supply zone that we were just talking about here is also up here. Okay. I would intend that if we get this back test and we move up into that range, completing this harmonic and also tagging this supply zone, we would probably also absorb and see a reaction off of that, right? And probably back test this area, same thing, right? This kind of would be your new area that you would look to back test. I also think it's funny that this supply zone is kind of at this this trend channel that I have drawn. So kind of similar, right? And then this is actually one of the biggest supply zones I've seen on a chart yet. I've only been using this indicator for a few weeks, but this is pretty intense. I can't say that I've seen a bigger one at that level yet. So if we touch that, what is that, 36 bucks? We will be rejecting off of that. Guaranteed. Absolutely. You hit into it, you're going to reject for sure. Take profit. If buyers can soak up all the open limit orders in here and overtake it and actually bounce out of this this next trend channel, it'd be pretty sick. But I think this entire area is going to be very, very, very difficult to overtake. It's going to be super, super. There's a lot of orders. This entire area is just filled with open limit orders that will be filled. And so we would need to have a ton of buyers, a ton of buyers. Not only do we need buyers willing to buy at $23 right now, but now we would need buyers to buy at 28. Now we would need buyers to buy GME at 34 to $40. Ryan's warrants that he put out was $32 by October. Perhaps we dip into the zone, we stay above there, trying to consolidate up here for that 20 days or whatever the warrants need. Very possible. Very possible. This is just going to be extremely difficult to just bounce right through. So I would not expect any of that to happen immediately. Okay. So that is kind of the overview on GME. So let's talk a little bit of tin. TA10. Okay. So let's do this. Let's do a side by side. And let's get Jimbo on here. Actually, I think I've already done this on a different chart. Let's try this one. Yep. Okay. So this is Jimbo currently. Let's change this to the crap that it could be. Just out of curiosity. Close enough. Okay. What I found this to be really interesting. Remember what I was saying, how if it's not a spring, it shouldn't double bottom and then shoot up, right? This entire thing could be just a redistribution, and you would look for a lower low, okay? It failed, and now you're looking for a lower low to find, potentially, for the official spring. You're looking in search for a new spring since this one had failed. Okay. What I thought was really interesting is, in the past, we kind of had the same thing here, right? You reached a new lower low on the squeeze. It created this rounding bottom. You had a reaction, but same thing on this. This was your previous high. When I say previous high, I'm looking at the body close, okay, because I'm more interested on the RSI at this point. So notice how we did not complete a higher high here or here or here. It was way up here. Okay, we failed to break out of that range, while the RSI, if we look at the high on that, matched up here, right down here, we made a higher high on RSI here. We made a higher high on RSI here, and also here. So you're making these hidden bearish touches of divergence, seeking continuation downward of the overall trending move on the price chart, in which this absolutely did, right? It happened. The signs were there. What I thought was really interesting is that we have a bat there as we do a bat here. We had this same Gartley. We had the same Gartley here. I'm sure that that same alt bat that I have drawn on here is in here as well. Should we just do it for funsies to see? This would be kind of neat anyways. Where's that? 1.618. So funny enough, right? It not even like just a tiny little reaction, but you didn't get it until it dropped even further. So for now, let's just see if we do have the potential alt bat here. Just out of curiosity, kind of funny. Oh, that's weak. I'm not sure that I'd consider that. I don't like that A to C point, but anywho. Oh, that's it's off. Yeah, man, you could argue it, but like, you could argue it though if you wanted to. So with that out of the way, so I was like, well, how the heck do we find, where the bottom is, aside from looking left where this was ultimate support, right? Squeeze happened, came back down, ultimate buyer support stepped in. You never seen it for how many years again? You didn't see it for a long time. And so, but what I ended up doing then is I ended up taking a fib, right, from here to the high. That's this guy right here. You saw that it actually came all the way down and completed the 1.618 extension for the sneeze to officially occur, which again was the same level of support down here. So what does that look like on our current chart? If we were to break that lower low, which, this is kind of that same lower low. You saw a low reaction, but this thing just kept drifting down. Yeah, you had a nice little rebuttal to retest kind of that golden pocket, which is also prior support and resistance areas, right? So it's retesting this same area and then failing before you hit kind of that spring. And then once you hit that spring, then you see all this ramped up volume, right? Very violent, kind of like we were talking in the beginning of this video. So I have drawn that same fib, okay, from the rounding bottom, or rounding top, sorry, double bottom, to the most recent high. That 1.618 is roughly 17 bucks. Looking left, our prior support 1770. That's not too far away. I think this is super reasonable. I think that we need to pay attention. If we were to drop below, we confirm that trending move down. We drop below that golden pocket. We need to pay attention to these very key important spots, because we could miss out on the actual spring. Of course, we can look at other indicators. We need to see volume, see what that's doing. When we got down here, it was not here very long. 2 weeks, I think. Let's just do it from there to here. So that was 30 days, okay? So let's look at what happened on the smaller time frames here, because you can see a new accumulation pattern, right? Right down here. Okay. Let's get that off. So this is kind of your widow box. Okay. You broke through, you accumulated at these lows so once you entered this box, you were in that box for 10 days, less than 10 days. And you broke out, hit the SOS phase. Okay. Drop back down, retested prior highs of this box, prior trading range highs for buyer support. Buyer stepped in. You can see the little ramp up in volume right here. This is known as the BULPS. You saw the expanding volume up out of this range, and then that's ultimately, right, that caused the squeeze. Okay, so if we're to see something similar, whether this whole thing happens at $20, $19, 18, 17, 16, 15, whatever it is, I want to be looking for a new a new accumulation to occur. But also what's very important is you want to look at these break of structures, okay? You want to confirm that the trending move is changing. And what do I mean by that is, so let's look at this right here. This is a low, and this is a higher high, right? Kind of over this range right here, okay? But the thing is that now this is your high, this is your low. So this, think of it like what Jackie says, this is your ooga booga, okay? You need to break above this to confirm the trend change. Or if you break down below that, it's going to continue this downward trend, or that had been going on for years. In which case, this failed to break above. It did break below. You actually back tested it here, in which you could have taken a short position. Once it broke the range here, back tested, you take the short there, and then ride this thing down for a few bucks. And so it continued to make these lower lows, right? Until right here, right? So this is your official lower low, and I personally count bodied closes because they show buyer and seller strength rather than just wicks. And so your immediate high before that was right there, okay? And so you ended up breaking a higher high over this here. You actually did it over this one too. And then you came back down to retest that same trading range, but now your ooga booga here and here, you need to see, is this thing going to break a lower low, back test and go down further, or is this thing going to break above and continue the overall trending change? And obviously you can see what it did, right? It continued up, made a higher high past this even, back tested the top of this range, right? Draw a big old rectangle here. Looking left, you see that this was a spicy zone. So broke out, back tested the top of that range, and continued up. It's exactly what you want to see. So these are kind of the mechanics that I'm looking at when identifying the official spring. I want to see a break of structure, right? Your highs and lows, you break that structure, you buy the back test because it's easy, risk reward. Set your entry here, your stop loss right below prior lows, and off you go. Hopefully. This is what I'm kind of looking for on GME right now. If we were to lose that support, okay, it would just seem odd to me, like I said earlier, to see a triple bottom and then have this whole thing be a spring. That just seems weird to me. You want exactly what you see here, like one final liquidity sweep down to the lowest forms of support. And you want to see that thing rocket ship out. So that's why I think if we lose that support, I think we do see a lower low. Now, whether it's 19, 18, 17, 16, 15, whatever it is, I don't know. I'm going to look for this change of character, this break of structure on these lower time frames to then be able to set my my entries and stop losses. So that's what I'm kind of looking for. Again, that's bearish, right? That's the bearish take. We haven't exactly seen good things coming out of Jimmy right now because volume has been pretty much dog shit ever since we came up to this level. Been trailing down, not ideal. You want to see out of a spring it just continue to go, 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 go. Now, if we do, like I said, for the bullish case, we don't break below this, and we see the movement up with, let's say that this volume, we see that volume pick up. Oh yeah, oh yeah, oh yeah. Take your profit here. This is what you would want to see. You want to see that expanding volume coming out of this. You want to see this hidden bullish divergence develop and confirm. That's what you're looking for on the bull side. Okay. Right now, net neutral until we either confirm the hidden bullish divergence or we confirm the lower low, and then we're kind of looking, you know, at that minimum $20 level, but probably lower than that if I had to be honest. That's kind of what I'm looking at here on the charts. No, it's not what everybody kind of wants to hear, but you know, it is what it is. I think it's funny that just the similarities between the squeeze event and kind of what we're seeing now. I think that's hilarious, but the technicals, you know, kind of match up. And yeah, so we'll figure this out. We'll GME to the moon eventually, but we might just have to be patient and kind of see what happens. We know Ryan's cooking. And so when you put a pizza in the oven, you don't put it in for 5 minutes and expect it to be done, right? So let it cook. Let it cook to what it needs to be. Make sure the pizza's ready. Trying to think if there's anything else that I wanted to share. I don't think so. I think that's kind of it. You know, it's kind of monitoring this daily RSI wedge. You break below that wedge, break below the RSI 50, and confirm that not ideal. Then then we need to start paying attention to these big levels here for a potential official spring. Then let's see here. See if I got anything on my my other chart here that I want to talk about. I don't think so. Let me turn drawings off. I just thought about something here. So I was looking at the monthly. So let's talk about a few things here. So the monthly, someone in Discord pointed out, you know, this definitely looks like smart money, up, down, up, down, up, down, up, down, up, potentially down, right? Smart money moves, you can see them. They're pretty much just in sync. Always kind of has been with GME. Looking at the technicals, though, your Bollinger Bands on the monthly are starting to expand out. You are currently, and hopefully not in the next 5 days, hopefully you don't close below all of these forms of support here. The Hull, the 50 MA, the 20, the midline of the Bollinger Bands, and looks like you got the, is that the 8 or the 21 EMA? Whatever it is. Not ideal. You know, we have potentially bearish KST cross, not ideal. Again, this is not confirmed, but let's say that we do project GME to go down to that, you know, $17 range or whatever it is for that spring. Maybe, just maybe, it'll exit the bottom side of the monthly bands. How many times has that happened? Well, we can look at the top right here. Once you exit out, back in. Once you exit out, back in. Once you exit out, back in. Okay? Squeeze. Once you exit out, back in. Exit out, back in. Same thing happens on the underside. It does. Once you're out, back in. So I wouldn't be shocked if we do hit just outside that, and then that could be, right, that's kind of confluence to maybe that spring that we were looking for out. That might give us the potential wedge that we have here for the final breakout. We have a TD10 currently. Maybe that turns into the TD13 that we could be looking for. If it has the monthly TD13 candle were to come to fruition, we have a long wick on the bottom. Super bullish. Okay. The weekly bands are super tight. They were tight here, saw explosive move. Tighter here, saw that move down. Tighter here, saw that move down. Doesn't happen too often, doesn't look like. So, I mean, it's prepping for something. I'm really hoping that this TD8 on the countdown phase does come to fruition and we continue up and make that TD10, 11, 12, 13 way up here, wherever that is. I want to say that the 2-day, yeah, so what I don't like on the 2-day is that this printed a TD8 on the countdown as well, but this is to the bearish side, right? So, man, if that thing gets under it, you know, you might get your TD10, 11, 12, 13 down to the lower side, wherever that might end up. But again, you gotta, I want confirmation. I want to see the 2-day and the daily lose that RSI 50. I want to see that bearish MACD cross. I want to see all of this happen first before I, you know, actually freak out and, you know, change my trading strategy until then. So again, we're just waiting to see what happens. Rocket ship up out of here. Awesome. We know where profit targets are. We know where supply zones are at. We know what to do with it. We go down. We have some targets from those fibs. We have demand zones below us. We know lowest form of support post sneeze that was shown is that 1770 area. We have those that 1.618 fib drawn to around $17 as well. So prepared for both sides of the move. I just need the chart to give me something. I need the data to make those decisions, because right now it is just chilling here, and I don't like to make decisions until the chart proves something to me. And right now it hasn't proven either way yet. So net neutral until it does. Know exactly what to look for, right? So that's all I got. I do have that new intro. Hopefully you guys enjoyed that. Spent like 3 hours on it. So yeah. Thanks for watching.